Hello guys, how are you guys doing? Welcome to another section, and today we are going to be talking about something very important. We have studied on key levels, both storyline and all of that, but today I want to talk about something more advanced, something most people don't talk about. I find out that most of us at the end get confused. Now, let's start with this. Let's start with um, long-term trend and temporary storyline. You know, most of the times we're being told that, let's say for example, or I think I should use a new place for that. Maybe I should use this place. Yeah. Now we're being told that if a daily storyline starts here like this, you saw a break like this, and this is a daily storyline. It starts here. Once it gets to another daily level, and it gave you a confirmation that a new storyline has started, automatically this one has ended. Now I want to tell you that that is true, but in another sense, from what I have seen, it isn't true. Yes. Now I want you to understand that there are long-term storyline and there are temporary storyline. When we get to the charts, you will understand more. So most of the time, uh, price is buying like this, give you a higher low and a higher high, tap into another daily key level. Now, a lot of you will start selling from here, saying that okay, the bullish storyline has ended. But you see that price will not even get to the 50%, or price will just do something like this and it will fail. It will do that multiple times, and when it gets to a stage, it will now reverse completely to take out all this liquidity here before the main trend will continue. That is what I mean by the long-term trend and the temporary storyline. So it's not like that concept is not true, but the concept is true. But apart from storyline, you should know that liquidity, sorry, is also present in the market. Yes, liquidity is also present in the market. Let's go to the chart, and I will explain. So today class will be a bit confusing, but you should make sure you learn something. Why is this? Yes, okay. You should just make sure you learn something. Okay, so we are currently on a weekly time frame. Okay, let's start with this place. This place here. Let's start with this place. So this is a weekly key level, and weekly is rejecting weekly. Okay, we have a break here. Maybe we should start by marking our structure. We have a break here, right? Now, this whole move started from here. This particular place was on the 13th of January 2025. This whole move started exactly from here, and price was buying, 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 buying until price broke this place. Now we can easily say that our storyline is bearish. Now we can easily say that our storyline is bullish. Why? Because price is coming from where? Somewhere. You can see that after this break, price tested this place, and the buy continued. So let's say as price tested this place, you go down to 4 hours, you definitely see something there. You will definitely see something. You see that I rhyme with an OCL. So if I would want to enter this trade, I'll use a confirmation. Either I wait for 4 hours to be broken to confirm the daily storyline. So I can either wait for here to be broken, then I enter from the retest like this. The stop loss will be maybe below here or below this place, and my target to be this high. You understand? Something like that. So, but that's not what I'm going to talk about now. What I want to talk about is how you are going to recognize the long-term storyline and the short-term one. We are going to be talking more on liquidity concepts also. So, what is price doing? How is price doing it? I hope we understand. Now, I will use this place to explain something to you. Look at this candle. Let me explain the weekly candle for you in case you are making your weekly outlook. Now, from here, From this place, you see that price is testing this place, and then price is going up. Now, where will your targets be? You know that eventually this high is going to be taken out. This is our next draw on liquidity, right? Now, price close bullish. Look at this week. This is a weekly time frame, please. Now, this candle close bullish, but close with a gap, a very big gap here, a very big gap. Now, you know that next week, once price open from here, there is high chance that price will come down like this to test this place or to fill the gap completely before price can start or continue buying. Now, look at this place. Look at this place. Key level are not only OCL and the V shape and the A shape, and also liquidity are not just those swing low that you mark as inducement, double top, or all of that. No, fair value gap are also liquidity because they attract price to themselves. I hope we understand. Now look at what the next week candle did. Then she reduce this to this. Look at what next week candle did. The candle first went up. You see that the candle now went down to do what? To test this place, even though it didn't reach this place, but at least it filled a part of it before the buy continue the previous week. Now when the previous week opened, it tapped into this OCL here and then start going up. Now if you go to your daily time frame, where most of us get it wrong is this. We'll mark our key level. We'll now go to 4-hour time frame. On a 4-hour time frame, you see that we already have a break here. This is a break already. And a lot of people will now say that a new storyline has started. You see that after this break, a lot of people will be looking at this retracement to look for sell opportunity to start selling. Because why? They believe that this is a break of structure here, and price will be giving us what? A retracement to the 50% to continue buying. Whereby when you go to the weekly time frame, the weekly time frame is not looking at what the daily time frame is doing. In the weekly time frame, our aim or the weekly aim is what? To take out this high. This high here. This is the weekly aim. To take out this high. Since it have not been taken out, price will not sell. So you know that right from here is buys that you'll be waiting for. Once this liquidity have been taken out, then you look for what? A key level, a valid key level on a weekly time frame where price might, we didn't say price will reverse from, price might reverse from. So I hope you see where we get it wrong, because if you go to a 4-hour time frame, this place now is a daily key level, and price, let me just put this one here, and price has given us a break here. A lot of people will now be waiting for retracement to continue selling, saying that a daily storyline has started. Now this is where I will now re-explain what I said earlier about a long-term storyline and a temporary storyline. Now this is a temporary storyline. This is not a long-term storyline. So this storyline only started. Why? Because price is respecting a weekly and a daily key level. So price is giving this this retracement to show that yes, there's something strong here. But my main objective is to take out this liquidity above here. Except I do that, price cannot sell. And mind you, another thing you should know from a weekly time frame is this. If you watch now, whenever a candle opens, when a candle opens, or let's say this candle closed, the candle is bullish. When a new candle opens, it always goes down a bit before it will now go up, leaving a wick here. Now the market is trying to tell you that there is no buyers without sellers. So when price open from down here, buy up to this level, it will now make a little retracement to show that at least there is sellers. When a new candle now open from here, it goes down first. Are we understanding? Showing that there is sellers, there is enough people that is available to sell so that we can buy from them, and price will go up like this. Now, when price want to close, it will make a quick high, then make a little retracement and close. I don't want to go deep, but since this is not what we are talking about, but have this at the back of your mind that whenever a candle opens like this, then make a little retracement and give us a sharp buy, and then retrace downward and close. This is exactly the concept of accumulation, manipulation, distribution, and another accumulation. Sorry. This is also the concept of what? Range. The range that happens. And then the turtle soup. And then distribution. And then close. This is also the concept of candle. The candle, you know, this is a bullish candle, and this is the wick of the candle. So we can name this our, if this is a bullish candle, we'll say this is open, right? This is low, this is high, and what? This is close. When you are learning Msnr, you are being taught this. But we are not going to talk about this. Let's continue. Now, this week has closed. Let me see. Okay, it hasn't closed yet. This liquidity have been taken out now. Now we know that as this liquidity is taken out, we need to see a full body break, right? The only key level we have here is this OCL, another OCL close to it. Then let's go to the daily time frame and see what happened. On our daily time frame, you see that this is just a break, and this is a key level here. So we can also mark this key level below here because of this liquidity. And let's go to our 4 hours time frame. On our 4 hour time frame, this is a break of structure here. Let me remove this one. This is a break of structure right here on our 4 hour time frame. So I can refine this to this place or leave it there. Now let's now see our 1 hour. You see that I listed market structure, I listed storyline, long-term storyline, and short-term storyline. Now this whole move like this started somewhere. Now that is a long-term storyline. Any other one you see is a retracement. Those retracements are short-term storyline. So because a storyline started below, and you can say that okay, the storyline have ended because it's testing a daily or a weekly key level. You saw a break on a daily time frame. That doesn't mean that that previous one have really ended. That previous one is still in charge. It takes multiple break and market balancing to say that that previous one has ended. Now one of the things it takes is when you see an engulfing candle on a weekly time frame. We are going to talk about that. Yes, we are going to talk about that. Now look at from this place on April 22, 2024, price has been buying and buying. All this one you see here are all retracements on a weekly time frame. These are all retracement. But when price gets to a key level here, look at it, this is a key level here. When price got to this place and structure have been broken, now what then happened? Price now gave us an engulfing candle here. This is an engulfing candle. That was our first confirmation. I believe that on a daily time frame there might be a breaker around here, and then this place failed. This is where we now know that this is no longer a retracement. A new storyline or a new long-term storyline has started. You can see how price dumped. So if this place didn't fail, if price only gave me this engulfing candle here, I would have said that okay, price is just retracing to fill this gap here, and then tapped into this zone to continue its buy. You can see that that is exactly what happened here. There is multiple gap here. Price filled all the gap and then tapped into this zone to buy. Can't you see? Look at the same thing happen here. This is a fair value gap. Price filled it, but didn't tap into this zone. But yes, price bought. That is why I told you that fair value gap are also liquidity. Price normally comes back to fill the fair value gap. So what it takes for a new storyline to start, sorry for the mix of word, on a weekly time frame, you need to see an engulfing candle like this, an engulfing candle, and then price should fail. Let's say if there is a, a swing that was initially created, I want to see that swing fail like this. So that apart from this engulfing candle, price is coming from somewhere. Yes, I want to then see this swing fail. This will now be my second confirmation that a new long-term storyline has started. So this is also for the daily time frame, for the weekly time frame, not just for weekly, but both for the daily time frame, not just for the daily, also for the 4 hour. If you are using just 4 hour storyline, you want to see something like this. Look, everything you see in the markets are all the same. Now, most of us, especially me, I use 4 hour market structure. Most for our major market structure like this. Now, most of the time, if you see price coming from here on a 4 hour time frame, price has tapped into a daily key level or a daily supply, and now you have a break here. Now, most of us will now say that okay, this move have ended. It haven't ended. Why? Until when this place fail before we can say that this move have ended. Otherwise, the move have not ended. Price is just retracing to take the internal range liquidity. And when we get to this place now, we now say okay, we saw a break and another buy move has started. No any buy move started that start from here. The move have already started from where this whole buy started from. That is just what I want you to know. So price is buying, buying, buying. All this place is protected. This whole move started from somewhere here. So do not say that this buy has ended because price came here. Now a new buy has started from here. This one has ended. No. So just have it at the back of your mind that all these buys started from somewhere, and until when this place fail, that is when we say that a new move wants to start. Now eventually you now see price creating multiple lower low, not just lower low, but major lower low. You know that we have major structure, we still have minor structure. So that is by the way. Now I hope we are not getting confused, but now price has taken out the liquidity, and let's go to our daily time frame. Price is making a retracement here. We can enter for a buy here using confirmation. Yes, this is 1 hour time frame. This is a breakout structure on a 1 hour. I love 1 hour and 30 minute structure a lot. And inducement entry. Let's see what price will do. Yes, I felt like price haven't meet a certain criteria here. I can just bring this to this place. All this will be my liquidity. Now mind you, I won't enter directly. Let's talk about confirmation entry now. Now price didn't tap our entry. Let's see what happened. Let's go back to the daily time frame. What is placed? A liquidity. Liquidity was taken out. No, just the first candle, but the second candle wasn't taken out. And price is making a rejection. But now, what is our weekly time frame and our daily time frame aim? Our weekly time frame aim is to take out this place. This is our weekly time frame aim, and we have taken it out. Now we need to buy to balance price before we start looking for retracement. And then this is a key level right here. This is a key level. Price has tapped into it. What are we going to be expecting from the market? Buys, right? But price didn't get to our key level here. What do? You wait. Yes, as simple as that. You wait. Price has given us an engulfing candle on a 4 hour time frame. I won't still enter. This place is a valid level, this V shape here. So I can easily go down to my 1 hour and use confirmation. You can also see that on our 1 hour time frame we have a break, but yet price has not given me a confirmation. I hope you see. And if I'm going to be looking for a 4-hour break, then I'll wait for price to get to this place. It is very far. So what do? I wait. As simple as that. I just do what? I wait. See that it has failed. I hope you see that this was just a means of inducing traders into the market, and it then failed. Where is price coming to now? Our key level. You see how sweet this market is if you understand it. So now price has tapped into our key level and it's retracing already. This is 5 in the morning. Okay, this was on Thursday, Friday. That's every Friday 5 a.m. I won't take any trade for now. I want to see a break on a 4-hour time frame. Then I enter. That will give me more confidence in the market. I want to see a break. Okay, this is exactly Monday morning. Now your timing is also very important. Okay, this Monday by 1 o'clock, price gave us the break we are looking for. This is a break of structure. Liquidity have been swept, and we have an inducement here and the key level here. Let me still see 4 hours if we have any. Oh, there's a nice key level there. I can now buy from here, though the momentum that price using coming to this place is much. Yes, the momentum is much. Now my first target will be this high. Why? This is a one leg move, and if price is planning to make a retracement to this place to sell, it will fail because there is no inducement here. So price might just do something like this, take it out. So even if price wants to take it out and then come down, I'm out of the market already. So this will be my first target. And then let's look at the timing. 5 p.m. Oh, the timing is not so good. I think I prefer to use confirmation now instead of entering directly. Okay, I want to see price engulf this candle and then we enter direct. Okay, so let's just assume that our first entry is here and we are risking, instead of risking 1%, we are risking 0.5%, or we are risking just 0.2% because it is not confirmed yet. 1:6, and I want to see price engulf that place. Okay, we have the engulfing candle now. By 7:30 I won't enter. Let's wait till the next morning. Let me go back to, yeah, it's 8, 9, 10, 11, 12, 1, 2, 3, 4, 5. Okay, exactly at 1 a.m. price swept us out, came back to our entry, sorry, and exactly as 2, 3 is 4 o'clock, 5, 6. Now we now have a perfect entry. Now mind you, our first entry is still there, but now it's something else. Something else I'm seeing. Let me go back to the daily time frame. I'm seeing something that is getting me scared of this place. Is this a daily level? And if you go to a 4-hour time frame, we have this zone here and price has tested it, and then look, we have a break. Can't you see? This is a break, this is a QM to sell from, and you can also sell from this place. Now what if price is planning to give us a sell? That is another thing, but we are looking for buys because our buyers is buy. Let me see 4 hours if there is any other thing that I'm seeing here or any other thing happening here that I'm not looking at. This is strong 4-hour level. Should I enter for this buy? No, I won't enter for now. Again, I won't. Yes, I won't enter, not because I'm scared of the market, but because price is showing me something else. So initially I wanted to look for a level, maybe a level around here. I can buy from here. Yes, I can buy from here. My stop loss will be at this zone, and then my first TP will be here, and then my next target will be up here. Yeah, this is what I wanted to do initially, but buying from here is risky. Anyway, let's just risk it. Whoa, the buy went. So we have hit our first take profit, and then our second will be this place. We have 1:11 here. Remember, here we are risking 0.5%. Let me write it, 0.5%, and this place we are risking even less than 0.5 because of what I saw here. So let's say this place we are risking 0.2%. 0.2%. Yes, we are risking 0.2% here, and we now have full confirmation. Yes, we now have full confirmation. This is a break of structure. Now this place is a strong 1 hour swing, so you can call it a strong 1 hour swing. So since we have a break, this can be our inducement with retracement. But then what's the time now? It's 12 p.m. and what's the time that price tapped into our POI? 6 and 7 o'clock a.m. exactly as London open. Price boom. So I want to give you another entry. Yes, I want to give you another entry. Another entry. Now, this another entry that we didn't pay attention to. You know that initially this was a break, right? There was a break here. Now, remember that in your Msnr, for continuation entry is this letter N. Once you have a break like this, at the retracement, this will be your entry. Your next entry will be where? This place or any key level around here. So your first entry is where? This place. You can call it a breaker block. You target this high first and then the next one. You don't need to see an inducement here. You can still enter from here. At this zone here, you now have an inducement. This place will now be like your apex. I hope you guys understand something. So after this break, our first entry was supposed to be from here. Then maybe stop loss down here. First target where this zone here. Second target will not be our main target. This is a key level. That's why I made it our main target. So stop loss 22 pip, target 105 pip. Let's go back. Look at what happened. Immediately as the next candle opened, it tapped into it and zoom. And if you go to 30 minutes, we got our entry from almost exactly the same place, but this time around on a 1 hour time frame, I used a failed QM. Look at this QM failed multiple times. Look at it here. Price broke. This place is not a QM. Instead of price to use it here, it failed. And price broke it again, tapped into it, went up, and it failed again. Price tapped into it, broke it again. So I know that this place is a strong level. So I didn't even go to the higher time frame, but I know that there's something here. If you go to a daily time frame, you will see a key level there. Let's go and see. Look at it. You see, the charts don't lie. Look at this OCL here. Price broke it. It's fresh. Tested it. Broke it again. Test it and broke it again. Now let's go to 4 hour time frame and then refine it. I can refine it to this high. Let me show you what happened here. This high here, this breaker block. After price broke it, just like the pattern I just showed you, you see price tested it and zoom. Price came here, tested it multiple times. Once price broke through it, it is now fresh. Price broke through it again, broke through it. It is still fresh, tested it here multiple times, made it fresh again. Look, once a candle break through a key level with and close below or above it, it is now fresh. So you see that it also rhymes with this exact place where we took our trade. Let's go to the 1 hour. You see it. You see that this is the level. It also rhymes. This is the level. It also rhymes with the place where we took our trade. And apart from that, it also rhymes with where this failed QM. I hope you see. Nothing just happened. Nothing just happened in the market. So the next place where we would have taken another entry from is this zone here. This zone. Yeah, this zone here. Now it's broken. Okay. But I will go to the daily time frame and see if we have any key level that corresponds with it. We have one here. This one corresponds with it. Now remember that initially our main aim was to take out the liquidity around and a liquidity around here, right? Our weekly time frame took it out and closed below it. Now we know that price will have to close above it, so that price will then go and tap a level a key level before a retracement will start. Now, after this place fail, our next target will be up here. This high, yes, this will be our next target. I know that this will take days, but it's our next target. It will take days, yes, but it's our next target. So let's see what happened. Now let's see 1 hour. We're expecting price to come to this place here, this zone here. This is the break where I mark. What's the time now? This is 12 p.m. Price can still come. Okay. Whoa. Our first take profits have been met already. Price has given us a TP here. And then let's look at what's the time again. 1 o'clock p.m. There's still time. Let's see what the daily time frame is saying. Now the daily time frame is telling us that we have buys upon buys here. I can refine this to this zone here. Yeah, I can refine this to this zone. We now know that our next target is this weekly high up here. So I hope you guys see how we did everything. Now I'll be looking for more key levels to look for more buys. Yeah, I'll be looking for key levels to look for more buys on the market. There's a zone here. I can take something like this, but mind you, it's a risky trade, a very risky one, because this Tuesday price can just choose to, balance from here. So it's a risky one. So here we just risk 0.1% here. We want to risk more, 0.1% here. So even if we lose this 0.1%, we have 0.5% already running. Here to here, this 1:6, and here to here, we have what, almost 1:6 again. So that's enough for us. This one is risky. We can still choose to wait for this place, but this another good level, and mostly on New York section. Okay, this doesn't look good. I guess this might fail. Yeah, this might fail. Oh, it's pumping already. 7 p.m. I won't leave this trade. No, I won't leave this trade because of Asia section. So I'll set my stop loss to break even. I'll put my stop loss at PE in case. You can see exactly what I was expecting. We are out. We didn't lose anything here. And this 10 o'clock, 11, 12, 1, 2, 3, 4, 5, 6. Okay, this is 6 a.m. in the morning. Price is down to this zone. Let's go to the daily time frame and see what the previous candle did and what the new one is going to be doing. I think let me take this to this place. This 1% is no longer there. We are risking 0.5 and 0.2. This is the only active one here now. And where is price making a retracement from? This zone, this place here. This is where price is rejecting from. But now I want you to learn something now. Many of us, okay, on the 4-hour time frame, no break, but many of us will go to 1 hour and then say that we saw a break here, or price came back, tested the level, give us a break, so it means that we can start selling from here like this, like this. You are wrong. You are wrong. That is what I mean by the long-term trend and the temporary trend. Now your long-term trend is buy. Your long-term trend is buy. Your short-term trend is sell. This is just a retracement. It is nothing. If you calculate from this place to this zone here, to this place here, I think it's just 62 pips. That's nothing. Just 62 pips. So you wait. Now we now know that this zone here, we have this key level here that we are waiting for. We also have another key level here. Another key level here. So now let's go to 1 hour. This is morning already. I don't take trade during Asia. This is 1 o'clock, so it's Asia. I might say that I would have said that maybe I'll take a buy from here, put my stop below here. But since price got to this level during Asia, if you mark this whole candle, you see that this is a breaker block. Let me change this. Maybe a bit transparent here. You say that this is a breaker block, right? This whole level. But I don't take trade during Asia. I take my trade during London and New York. So let's say I won't take this trade, or I didn't take this trade. I will look for a confirmation here to buy, or wait for price to get to this second key level here. to buy. Now let's go to our 4-hour time frame and see. We need to see a break here for us to confirm this place. We need to see a break here. So then we take our trade like this and buy. That is just the confirmation entry. Another confirmation entry I use in case I'm not or I don't trust my buy level, I will use an engulfing candle. Let me show you. I call it my 3 candle formation. If you go to the 30 minutes time frame, look at this zone where we wanted to buy from. This zone here, this whole zone where we wanted to buy from. I was afraid of this place to buy. Why? Because I saw as if price might dump right now. But look at now, if I don't want to take this trade, what I will simply do is this. Remember what I told you about price? Maybe I should use a clean zone like here. About price giving us an engulfing candle like this, an engulfing candle like this, and then the engulfing candle is our first confirmation that price is reversing. But then after this engulfing candle, I can enter from here. But my main confirmation is when I see a break. This place, price made a retracement here. So it's when I see a break here that I can now confirm that this buy is going to go. This buy like this is going to go. It's when I see a break here. So you can use this as your confirmation. I call it a 3 candle formation. Why is it a 3 candle formation? Now you have maybe I don't want to talk about colors, but let me just say a bearish candle like this, another bearish candle here like this, and then you know that the next candle will open from here, the next candle will open from here and engulf this candle like this. This is a perfect 3 candle formation. Now your entry will be from here. This week of this candle, not the body, the week, your entry will be from here. You just enter from here immediately as this bullish one close. You enter from here immediately like this. So instead of waiting for change of character or anything, you can enter from here immediately. Or you don't even need to wait for price to, because there are sometimes that when the next candle open from here, it won't come down like this. It will just buy immediately. So immediately this one open, you just enter. This is another confirmation I use. So now let's go back to this zone. I hope you see exactly what I'm telling you playing out here. Look, the black candle touched this place, right? Now the green candle engulfed it. The green candle engulfed it. Immediately this buy candle close, you can enter from there. Just enter from there. Where will your stop loss be? Below that swing or below any previous swing. This is our confirmation. I hope you see. Another confirmation is this. That's the second confirmation is this. Now price has engulfed this place, but you can choose to do what? Wait for a break here. Wait for this swing to break. Immediately you see the swing break. The 50% of that candle, you can enter from the 50% of that candle. Look at this is the whole candle, and this is the 50%. The 50% of that candle, you just enter from there. Your stop loss will still be below here. Now with all this, your stop loss will be big, but it's on a safer side. I hope we are following. So that is just it. I just thought of talking to you about the confirmation entry. I also listed it as part of the things that I will be teaching you guys. Now, price has engulfed the body, but not the wick. We can choose to look for a buy entry from here and go. And if you go to a 1 hour time frame, you see that we have a break here. So I can choose to just enter from here. My stop loss can be below here, or I can choose to adjust it down to where this candle is, but it's too big, that's 2 pips, so I use 18 pips here. My target will be this high. First target will be this high. Always put your first target here, because price can just come and sweep this high and retreat. Then my next target will be here, this zone here. Now this will be my first entry. My first entry here, I might just rate 0.1%. Now my main entry will be when I see a break on this 4 hour candle. Look at it, this 4 hour candle. Look at this 4 hour candle. Remember I told you after the engulfing, you can enter. Your main confirmation is when you see a break here at this 4 hour candle. You enter and buy. So now let's see what the market did. Oh, market is going lower. Okay, it failed. We lost one trade here. Now we lost this one. A single loss does not determine anything. Now you see that if initially I waited for this break, I wouldn't have had this loss. You see why this is our main entry, right? Our main confirmation. So this one is just for early entry, to enter early. But this is our main confirmation when you have a break here. Now let's go back to our pattern in case you forget. Our pattern, we say that when you have the end pattern like this, your first entry is from here, your second entry will be from any key level down here, which will be your apex. Right? Now exactly what we have here. When we have this break here, our entry was from this zone, first entry. Now our second entry can be from where? This zone here, which will be our apex. I hope you are following. Okay, I guess we are having too much lines here. Let me remove all this. The lines are much. Oh, I can just put our just one single buy here. That's the initial buy that we took targeting this place. Now at this point, now this 1:8, right? And at this point here, 1:5, that's more than enough for us. So price has taken us out here at BE, break even. So we are going to now be looking for another confirmation to buy from here. Let's look at what's the time. 9 o'clock p.m. Wednesday. Won't take any trade for now. 1 p.m. 1 a.m. 2, 3, 4, 5, 6. Yeah, this is 6. Now let's go to our daily time frame. This now Thursday. Let's now go to our daily time frame. Okay, we lost 0.1% here. The 0.1 we risked here. 0.1%. Or maybe to make this more clear, I should just be using 1%, 2%. Let me just call this 1%, call this 5%. There's a reason why I'm writing all this, so you guys will understand. Now we had 1:5. We took 50% here. 50% of this, it means we made 2.5% here, or let's just say 2% here, and this place here we made 1%. We made 1% here. Since we lost 1%, so let's say we are 2% up now. Yeah, 2% up, because we didn't take our full profit here. Remember, we didn't take our full profit here. We're expecting price to get to this high here. So it's as good as saying we didn't take our full entry here. But now price has given us a retracement down to this place. So let's go to daily and 4-hour and look for a key level to buy from. We have this key level here, and open close level also rhyme with these breaker blocks here, this breaker block. So it's a good place to buy from. But then price haven't given us a break here. No break here, and this look as if price is making a retracement to this zone. You can see it look like price is making a retracement to this zone to sell. So to be on the safer side, there's no break here, no reason to buy for now, except I want to enter aggressively. So until price break this place, I won't enter. So I can call this my AAA reversal. Yes, now this is the zone where I wanted to buy from. I can just enter aggressively here for aggressive entry. Yes, I can buy from here. Stop loss below here, and my targets will be this high. So but with confirmation, I would want to see a break here. Let's see 30 minutes. Nothing in 30 minutes. So okay, we have this one here, 30 minutes. Let's see what the market will do. Okay, I'm glad I didn't take it. So just as I was expecting, price is coming down here to grab liquidity. This is Thursday. Let me see, what is this market aiming for? What is the market really aiming for? Is it this liquidity? This low is liquidity, and below these lows there are also liquidity here and a key level here. Could it be that price wants to take out all this liquidity and then buy, or even take out this low and then buy? We don't know. We don't know, but we know for sure that price is coming from this zone here. Now we can now go down to our 4 hours and look for an entry. Okay, I didn't see this entry. Look at this. Yeah. Now this place has failed. This is 4 hours coming from another 4 hour, and then 4 hours giving us a break. Look at it. This is a break. Now this is the same end pattern, but this time you need to reverse it. The same end pattern. You enter from the break and you continue the sell. So since now it seems like price wants to take out all this liquidity before it will buy, once we have a break here, our first entry will be from that zone. So stop loss here. Our target now will now be at the liquidity. This 32 pip. Maybe I should refine this more so that my stop loss will be more smaller. I can refine this to this place here. Yeah, 1 ratio 3, it's okay for me. So my target will be this liquidity, and then my main target will be this place. So okay, price used the first place, this first place, didn't use the second one. But I hope we understand. Now price is around the liquidity zone but didn't take out the liquidity. And then now, whoa, came back to our entry. This is still 11:30, there's still time. Let me see 4 hours if there is more confirmation to enter. No, it's much confirmation. You see, look at this zone. Exactly after the break, retracement, sell. So now we're expecting price to take out this liquidity and come down here. Whoa, the market, the king of all. So you see that immediately price match our take profit. This is our take profit here. This is our take profit. Immediately price match our take profit. It just reverse immediately. See, I want you to know that where you put your take profit also matters, because a lot of people might be targeting this place here. This is a weekly key level, saying that okay, price will want to reach here first before retracing, but price didn't do that. So where you put your take profit, it also matters. Let's go back to 4 hours and look for another entry. I overplayed this play here. So this is price hitting our take profit and then give us a sharp retracement. This is our TP here, and then giving us a sharp retracement. Where is price retracing to? Let's go back to 4 hours. This key level, this is the apex. Just look at this pattern from up here. Look at this pattern from up here. Are you seeing this pattern? Now there's something you guys didn't observe. You guys didn't observe something. I told you that I'm bullish, right? But why am I selling? Why do you think I'm selling? Whereby I'm bullish. Now, this sell you see me taking are still temporary trend to me. Yes, they are still temporary trend. Why? I told you that when price give me an engulfing candle, look at this is the last candle, so price should close below this one. Yes, price has closed below this one. Now the next confirmation is a break, right? Yeah, a break below this place. Price didn't break below it, price just swept it. Price didn't just swept it, but rather it tapped into a key level. This is a key level, a daily key level, a 4-hour key level. So this place is much more confirmed. So it's like saying that price came down here to sweep all this liquidity. I hope we understand something. And then lastly, look at the overall structure. This was a break of structure, a swing high, a swing low, a swing high. This was a break of structure. These are all retracements down to this place. And then price did what? Swept the liquidity. Now there's possibility that price will now do something like this. Liquidity swept, structure broken, retracement. You enter for a very fast buy. I hope we are seeing this. So it's just the market playing with us.
Yes, we can be looking for sales from here, but there are liquidity above here, so we can just be looking for sales, gathering all this liquidity, and when we start buying, all this liquidity will be swept, 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 swept. So that is by the way. Now, price is coming from where? A key level below here, and until this place fail, we are bearish for now. Yeah, look at it. Until this place fail, until we have a break here like this, we are still bearish. Once we have a break here, we can enter from here, we'll wait for a retracement here to sell, to buy, sorry. So if this place didn't fail, we are bearish for now. So what do we do? Let's check the time. I told you I work with timing. So this is the key level from our 4-hour time frame. And what's the time? 12 p.m. Yeah, New York is coming in. So I believe that price will give me that buy vibe, or that sell vibe, sorry, that I'm looking for. So I can choose to enter a sell, or I can choose to sell from here. My stop loss will be here, and my take profits now. My take profit also matters. My take profit will be here. First take profit will be here. Then let me see 4 hours. Yeah, I can just target this place. Do you know why I won't target down here? Because price can just give a retracement like this and buy. And once I have a break here, it's a full confirmation. So that is the main reason why I won't target down here. I hope you are seeing. So let me see 30 minutes. If there's any confirmation or any place here that I can borrow from my stop loss. We have this place here, this breaker. Or then also have this place, but it's much more higher. Maybe I can just select this kind of, but it's also big. I just need something small. You know? Yeah, I think I have a perfect one. Okay, this one, price swept it, break structure. Got it. This is a sweep of liquidity. This is a break of structure. And go to 15 minutes. I'll show you the inducement. This is our inducement. Perfect entry. And then price came here exactly as at 12. So perfect entry then for me. I'll target here. You see this trade, I'll risk. Okay, since we are using 1% instead of 0.5, I would have said 1%, so I'll risk 10% here. Because I know that this is a perfect entry. 10%. So if I'm trading a $1,000 account, a $1,000 account, 10% is what? $100. Now remember that I have 2%. Remember, 2% is what? $20. So I have a profit of 2%. So let me put plus 2% plus, sorry, $20, which is 2%. So we have $20 profit already. This is our overall account. Now I'm risking 10%, which will be minus $100. So if this trade hits TP, I'm making 300 out of it. So let's see. Price is still going up, up, up. Okay, we're going now. This trade just looks so familiar. It seems like I took this trade. Yeah, this trade looks so familiar. I'm telling you. This is 3:15. Let's still time. Oh, look at another entry. A sweep of liquidity. Liquidity sweep. Structure broken. So this time around is the body that I'm looking at, mind you. And now there's something else. What I just taught you guys, engulfing candle, body break. Look at it. This is the last candle here. This candle is the last candle. It has been engulfed and then structure break. Isn't that a confirmation? That's a confirmation to add more entries, man. You see it? And let's see 1 hour now. On the 1 hour time frame, the body has also been engulfed. Look at it. On the 1 hour time frame, look at it. Not just engulfed, we have a break. So another confirmation to sell, right? So we can add entry. In case you missed this first entry or you were afraid to take this first entry, the second entry will be here. For safety purpose, you put your stop loss up here, 15 pip, and you target here. Yeah, 1:2.7. So this second place, I won't risk 10%. I will risk 5%. I will risk 5%. So this will be another $50. So this is minus $50 again. So I'm risking $150. So now let's see what price did. Oh, what is wrong with this thing? I guess it's my network. Oh, okay. We are going. Whoa, we hit CP. So how much did we make here? $100, and this is 1:350. So we made $350 here. So another plus 350. Plus oh no, plus 350, and here we are risking $50. That's 5%, and this 270. So that should be 1 2. Okay, 2% is $100. I think that should be 120, I think. Or let's just write 120. Yes, it's more than that. So plus another 120, 120. So this is our profit. When we make any losses, we minus it from here. Now we have hit TP. I won't target down here because of the fact that price might just do something. Now today is Thursday. Okay, Thursday. Let's just allow the market, because this is already 5 o'clock, so we can just allow the market to play around. Let's see, 6 p.m, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5. Oh, this is okay, 4 a.m. the next morning. Can you imagine? Price actually came down to this place. This is crazy. So if we were actually holding this trade, this would have been 1:6. That means we made $600, and this the second entry would have been 1:5. That is 250, I guess. That's crazy. So look at this pattern. Can't you see that inverse N here? Look at it now. Look at it. N, first entry here, sell down to this place, then price swept it, use it as an inducement. N, can't you see that N pattern here? N, N, N. I hope you guys are understanding something. I hope I'm not making noise here. So if you look at it very well, you see that N pattern everywhere. See that N pattern, that N pattern. Now, in all of this, mind you, there's still a weekly in. Let's go to the weekly. You see, there's something we failed to look at. Something I'm just saying now. Something we failed to look out for is this. Before this week opened, we had this CRT, candle range theory. Most of us don't know about CRT, but we had this CRT. Look at the high have been swept. That means the low will be swept, and then there is a fair value gap here. Price can just fill this gap and buy. The next thing is this. You remember that initially we were talking about this place here, this high, where we said that when where I was trying to describe something that the market usually do every week, especially when you have gap. We mark this place expecting price to come here. Price just filled a little of the gap and went back. Now I think price is coming to this place. This exact place, price is coming there, or price will be coming here to fill the gap completely. Now mind you, if you mark from this body down to this place, this first place is around the 50%. So price haven't filled up to the 50% of that gap. It means that it's owing something. So price might be coming down here. Don't forget, price might be coming down here. Let me remove some of this. Remove this one too. Now we have an OCL here. It's, I think this is Thursday or Friday. I want to talk about something, but I won't talk about it now. I'll talk about it later. Yes, I'll talk about it later. Now we have another break of structure here. A break of structure here. This is Friday by 4 a.m., 6 a.m. in the morning. Let's see how the daily candle looks like. Now, let me see. Okay, look at this OCL here, this open close level. If you go to the daily time frame, the open close level also rhyme with a daily break, or you can call it the daily breakout block. Look at it. That same end pattern, or the inverse end, since it's now sell, they rhyme with it. We also have another nice one here. So we can also sell from here. You can see the price is already touching it. You can sell from here. Nothing really bad to sell from here. Yeah. Liquidity have been taken out. Key level have failed. The key level will now serve as what? A support for us. So and then this 10 a.m. Okay, everything from here go down to this place is Asia. 7 o'clock we're expecting New York to open. I can refine to this place, and let's see 15 and 30 minutes. This is a break of structure, and everything you have here is inducement of liquidity, and then we have a perfect order block here. So it's a good sell, you know, a good sell. Yes, it's a good sell. Our target will be where? This place, because we know that price will come here now. But something else, I won't take this sell directly. You know why? Because this level is still waiting up here. Yes, this level is still waiting up here. You see that it rhyme with a daily level, also a 4 hour, now 1 hour. So this level is now waiting up here. What if price wants to take all this liquidity, come to this gap? You know that gap are also point of interest. What if price wants to do something like this? But mind you, this is Friday. Friday price is a bit crazy on Friday. So what I'll use is my 30-minute three candle formation, or let's just say engulfing, an engulfing candle on 30 minutes. So let's see. Okay, exactly what I was expecting. You see that it failed. It failed. You see, Friday markets is the most craziest one. I don't trust Friday markets. No, I don't trust it. And I know see with this, I don't trust Friday markets. I won't trade today. Let's just look at what the market will do. Okay, so but we are supposed to take an instant execution from here. Yes, an instant execution. Our stop loss will be here, and our target will be here. But because of this is Friday, we won't take this trade. I want to teach you guys something. So you just pay close attention. 8 a.m. exactly at 8 a.m. It's a good timing. So let's see. It failed, and I'll tell you why. This 8 o'clock now. 8 o'clock p.m. I want to use forex, so can use a new chart, maybe Pepperstone. Yeah. Now, you guys might be wondering, what did I want to teach you guys? I want to teach you guys the concept of this. What I just told you earlier. Accumulation, manipulation, distribution, accumulation. Beginning of the week, Tuesday creates the week high, the week low, and then distributes. Wednesday distributes. Thursday creates the low, the high of the week, and Friday does what? Make the retracement. Does it sound familiar to you? Let's talk about the daily candle. Asia section. This is Asia. This is Asia. This is London sweeping Asia. The low of the Asia. If price is going to be bullish, sweep both the high. New York will now do something like this, play along, and then anything around 7-8 at the end of New York, price will now do something like this at maybe Tokyo, and then close here. Does it sound familiar to you guys? This is what I want to teach you guys. Why Friday markets and Monday markets are crazy. I know that you won't learn everything in a day, but trust me, I'll do my best. I have an indicator here that I will use. Now, maybe we should start with the daily. Okay, start with every day. So between here to here is Wednesday. This is the beginning. I'm coming. Why did I share this thing like this? Sunday, Monday. Okay, this is Wednesday. From here, this is Wednesday down to this place, and this is Thursday. Then this is Friday. So let's start with Monday. Monday. Now, please try to understand. Okay, this is Monday. It's not going to be easy, but try to understand. This is Monday. This is Monday, and then this is Tuesday. This is Tuesday. Maybe I should use yellow for Tuesday. This is Wednesday. I should use light yellow for Wednesday since it's also part of it. Yeah, they are all the distribution phase. And this is Thursday. And then guess what? This is Friday, returning back to where Monday is. This is a whole 1 week. Now, in another sense, you can. I need to change this. Okay, let me increase this in this. There's something else that I'm looking for that I'm not seeing. Background. Okay, we'll just use it like that. Now, look at this. Monday, Tuesday, Wednesday, Thursday, and then close. Let's look at this. Look at this. This is exactly as saying that you're having accumulation, manipulation, distribution. This Tuesday distributing. This is Wednesday, Thursday distributing down here. This is Friday. What? Closing. I hope you see. This is why I said I won't take that sell, because all the distribution phase that happen Tuesday, Wednesday, Thursday, mostly Tuesday and Wednesday, Thursday and Friday usually balance it. That is why I was afraid to take the sell, both the first sell and the second one. I hope we are getting something here. Look, if you understand this market, the market is I don't know, yours is sweeter. The market is sweeter than what you know. Yes. I'm coming. I'm trying to plug in my mouse. It's a chargeable one, and I believe it's low already. I need to plug the mouse. Sorry. Just give me a minute to do that, and also to take water. Okay, yeah. Initially the mouse was lagging, so this first example, let's enter. Let's go back to another week. We start again. This is Monday, and then this is Tuesday. This is Wednesday, and this is Thursday. And then this is Friday. This is Friday. Now look at what happened. It's like accumulation, manipulation. This is the manipulation that started on Monday. Distribution, and then close. You see it? So a lot of people saw this buy. there will be like, wow, once I see a retracement here, I'll just continue buying. But price didn't buy again. It sold. Now people will now be looking for more sales here. Price now close here, failed the next week. Can't you see? Let's do the third one and then I'll continue my teaching. So this is Monday. You see this study, it look like it's not so important, but it is. It is very much more important than you think. Very much more important. Now, look at it again. For the last time, open, high, open, high. Tuesday created the high, sweeping what? The manipulation, right? Now, this is now the uh, the the accumulation. This is the manipulation. Liquidity being swept is the manipulation. This is the distribution. Price distributed Tuesday, distributed Wednesday, and you see from on Thursday is balancing. You see what I told you, right? This place is Thursday. This is T. Thursday. This is T. Friday. F. Now from on Thursday it's now balancing and then close on Friday. Are you guys understanding? Look at it. And then close. You see this pattern? It usually happens always. We just don't pay attention to it. Now, have this at the back of your mind that Monday opens the markets, yes, but most of the time, Tuesday, Wednesday, or Thursday creates, or let's just say majorly, Tuesday and Wednesday creates the high or the low of the week. We would have looked for more example, but there is not much time. Look at it. Monday distributed. You see that when Monday distributed, this whole buy started from on Tuesday. Tuesday has given us the low. We know that we are bullish. Wednesday, Thursday, Friday. Look at what Friday did. Went up and went down to close. So in case maybe you are looking for more entries to buy from here, Friday will pick you out and close here. Look at the next week. This place is a bit choppy, but try to understand. Monday, this is Monday, right? The accumulation phase. Tuesday gave us the low of the week. Tuesday is now bullish. Wednesday, Thursday, and Friday, then close here. I wish I could see a more perfect example for you. So these are just every blue demarcation you see is weekly. Then the thin line inside of it are all daily. That is by the way. I hope you guys understand something here. So you guys should be careful, and also I'll make a clean video on this some other time. But for now, let's focus on the price action we're looking at. So let's go back to forex.com, and then I don't need this for now. So yeah, weekly is over. Let's go to, I told you that at the beginning of every week you go where? To the weekly time frame. You're not coming to the weekly time frame to do anything. You're coming here to know what is happening. Okay, you're coming here to know what is happening. Now this week has distributed. Yes, this is a CRT here. This the CR high, and then this our CR low has been swept. Mission accomplished. But now another CRT is forming here. Another one. Another CRT. The low have been swept. Now we know that our next strong liquidity is where? The high. But then another thing here is price didn't tap into this place. In fact, it looked like price didn't tap into anything. If you look closely, you see that price didn't tap into anything for this buy. When we go down, you'll see what I'm talking about. Okay, look at now. Price didn't tap into. There's no any key level here that price tap. Let's just swipe this liquidity. And is this a retracement or is it a fake out? Why is price trying to outsmart us? We are intelligent people, you know. We are very intelligent. You guys know that, right? We are intelligent. Is price trying to outsmart us? No, I don't think so. I think this is just a replacement. Yes, we just can't see it because our eyes are all bullish because we saw a CRT, we saw this, we saw that. These are all a replacement, and mind you, this place is here, and all these are liquidity that need to be swept. So this one was swept. Yes, price is trying to outsmart us, I guess, but it can't. We are smart people. Yes, we are. Yes, liquidity was swept here. Hello. I don't know why my mouth is lagging again. Second. Sorry, need a minute. So now I want to state something clear here. Friday just came up here to grab liquidity. So there's possibility that price will just we have this A shape here and liquidity resting above it. The low have been swept. Look at it. I think this is a 2 candle CRT. Low have been swept, so there's possibility that the high will also be swept. Let me remove some of this line. The lines are already much. So there's possibility. Okay, now something just came to my mind. Remember what I told you about the weekly? We'll still talk about that. But for now, have it at the back of your mind that if a new candle opens, it can come here like this and buy, or come here and buy, or even this place, come here and buy. So let's see 4 hours. On the 4-hour time frame, this is a break of structure. You agree that with me that we have a break of structure here, and we're expecting retracement to the 50%, which price has already did. But this place is a single leg move, so that makes it a risky place. And secondly, we want to see a break here to confirm that price is bullish. Okay, so we'll just wait. This is Monday. Price is retracing from this place 2 a.m. Okay, the market has given us a break. You see what I'm telling you about? So oh no, this one is news. 8 a.m. Those GBP USD traders starts at 8 a.m. They are the most craziest one I've seen. So we can enter from here if there is any confirmation for us. Oh, this place. So now price never give us any retracement here to sell. So I don't think I'll be selling from here. Let's still wait and see what the market is doing. Something has happened. Something has happened. The gap have been filled. Can't you guys see? This gap have been filled. So now we can buy with full confidence because price will not be coming down to this place for any reason anymore. And mind you, price has engulfed. This weekly candle have engulfed the previous one, but until when price break here, that is when we say that we are fully bearish. Yes. So it might take months for price to engulf here, but once this place has been broken, we know that there's possibility that price might even, come down here like this for a very long time. See, what I'm trying to teach you guys, it's a long time bias, a very long time bias. So let's see 4 hours. So that this place is a key level now, and yeah, initially we had a break here, and on our weekly, on our daily structure, I'm not really seeing anything except that there is a key level here. Yeah, there's a key level there. So for now, I really don't have any bias except that I'm expecting price to come to this place. If I see a confirmation on here, I can sell. Yeah, if I see a confirmation, I can sell from there. So now let's play price and see what price is going to be doing. So let's see. Okay, this 8 p.m. on Monday. The day is over already. So it's currently 4 a.m. 567. Yeah. Currently 7 a.m. on Tuesday, the previous week. I'm still not seeing any reason here to keep on selling, and at the same time no reason to buy. Daily time frame, we have a break here on daily, on a 4 hour time frame. Could it be that the reversal that I'm waiting for is already happening? Could it be? How do I confirm? How do I know that price is now selling? I guess if I'm going to be taking a buy here, then it's a very risky trade. Like if I'm taking a buy here, it's a very risky trade, a very risky one. So let's see 30 minutes. On 30-minute time frame, we have a break here, a break here, a break here, and then this swing never gave us a break. Now our next round liquidity is here, but on a 4 hour time frame, we also have a break and the key level below here. Let me see what I'm missing, what I'm not looking at. What are we really not looking at? Is there something happening that we don't know? Let's see what 8 o'clock does. 8 o'clock gives us a break, and I guess I can enter from here. I can enter from here. That will leave my stop loss very big. So this will be my first entry, and then our targets here. 1:2. It's not really so good for me. 14 big. Okay. What if my stop loss is here? 1:3 now. It's good, but I won't be risking so much here. I'll risk just 2% here because it's not a high probability trade. So I risk just 2% here. So 2% is $20. Okay. Let's see. Okay, we hit CP. So $20, 1:3, that's $60. So we have plus $60. Plus $60. Yeah. Where's the previous ones? Join it again. Plus $60. But now let's see 4 hours now. Price is at this 4 hour key level. We can choose to sell from here, sell from here to take out this low. But I'm afraid that price might be bullish now. Yes, it's still 3 p.m. I won't trade for today. Yeah, 4, 5, 6, 7, 8, 9. Are you saying it? 10, 11, 12, 1, 2, 3, 4, 5, 6. So this is Wednesday by 5 a.m. in the morning. Are you saying this? Just know that the market is one crazy guy. One little crazy guy. So I would have entered from here. I would have entered from here when I saw this break. After this break, I would have choose to enter from here. Maybe my stop loss will be here, or still here, Then my target will be where? This place, first target. Maybe here, second target. It will give me a good RR, but then I thought about it. I should wait for another break. That is double confirmation. Now, this buy I took, I already saw a body break here. This is a body break. This is a body break. Look at it. On a 4-hour time frame, confirming that a new storyline has started here. But then I needed more confirmation, and that is number one. Number two thing is this. This is a CRT. Look at this is a CRT. Candle range theory. The low have been swept, so we're expecting price to come and take out the high. So this would have been my second target. Are you guys understanding something? Now, thirdly, on a 1 hour time frame, let's look at this place. On a 1 hour time frame, I got a break here, a break, and then an overall break here. And an overall break here. So that means I could have still entered from here. Double break. I got this break, this one, and this one. I'm showing you all the confirmation that made me to take that buy, even though I wasn't so confident about the buy, because price can just choose to go back anytime. Thirdly, let's see 15 minutes. 15 minutes always tells the truth. No, that guy doesn't lie. 15 minutes, this a break, a swing, no break. This place would have been my, in case this place failed, this would have been my second entry. Yeah, this will be an inducement. Mind you, this high have not been broken. The low that we're expecting to push price haven't broken the high. So there's liquidity here and there's liquidity here. So price might do something like this, and then this place will become a relative equal highs, another liquidity, first target and high. So I hope we get it. So now this is Wednesday, by morning on Wednesday, and let's go to the daily time frame and see what the market is doing from daily time frame. Maybe I should take this here, this here, this here. Okay, we already capitalized on this 2% here. This here, this here, this here. Oh, I have so many profits here, you know. Let me remove this. Yeah, these are all my profits. You know, 350, 120, that's almost equity. So now, since this candle closed above this one, I don't need to start looking for sales anymore. I don't know that I'm fully bullish. So the weekly objective have been fulfilled, you know. Let's go back to the weekly now. The weekly objective have been fulfilled. The weekly objective was to come down here to balance price. Now price is now balanced, right? Now the next objective is this high, because this was a CRT. The price came back and swept all of them, but this high is the next run liquidity now. I hope we get it. This is our next run liquidity. So whatsoever buy we are taking, this will now be our target. The high is now our target. This beautiful high up here. So let's see the daily. On the daily time frame, we are going to be looking for opportunities to short. Yes, small opportunities to short. We just start going short until this high is being taken out. Let's look at 4-hour structure. I trade 4-hour structure a lot, and the number one thing you should know is this is a one leg move. This move is a one leg move, which is what makes it liquidity for us. This place is liquidity for us, so price will definitely take it out. Price can take it out, react to a place here and sell. And mind you, we saw a CRT also on, is it the daily time frame? I forgot. Okay, yeah, it was a daily time frame, but it's not valid anymore. So what we are going to be looking for now is areas of which we can sell from. I want to clear all this. My chart is so messy. So we can see what we want to capitalize on more. I hope it's now clear. So this is a break of structure to the downside, right? This is also a break of structure. Now this high doesn't has any inducement, so it is now our next run liquidity. We know that price will sweep it. Apart from the fact that price will sweep it, we are going to be expecting retracement. So we hope that price will sweep it, take that liquidity to come down, and grab the one below to buy. And lastly, this is a QM. Look at it. This is a daily QM here. I love daily QM a lot. Yes, price respects them. In case you don't know, price normally respect them. Let's see 4 hours. This is 4 hours. You see this particular place, I think I traded it last year. This is 2025 May. I think I traded this place last year. I am so sure of it. I traded this place last year. I will find this to this OCI here. Maybe then delete this one. This is my buying spot. Now this is also structure being broken, but yeah, it's structure being broken since it's multiple candles. Um, our next place to buy from will be down here, here or here. So let's wait for liquidity to be taken out first. Yeah, liquidity have been taken out and structure have been broken. Let's see 4 hours. We are now confirmed bullish. You see, this is the place where I didn't pay attention to. Oh, I forgot. I really didn't pay attention to this place. This place here, this place right here. Look at, it's a break. This place is exactly a break. Here, go to 1 hour. There is opportunity to buy from here. Though this 7 o'clock, price broke it in Asia and then another break in London. But it's a good place to buy from. Only the fact that I might be afraid of retracement from here, but this is another break here. I will look for replacement to buy, to be very honest. So I'll just use 30 minutes confirmation or 30 minutes candle closure to buy. Oh, price is crazy. I actually mark this place and now that's where price is responding from. So I want to see price engulf a candle on 30 minutes. No engulfing. No engulfing. So I guess we are using this high now. Okay, 2:30 p.m. There's still time. Okay, all of them failed. Now this could be a meet. Yeah, it could be a meet actually, but let's see what price will do down here. Then we'll determine. Okay, liquidity have been swept, and not just liquidity, we have a 30 minutes key level below here. This 3:30 depends on what the next candle do. Okay, I'm not taking any trade again for now. 7 o'clock, 8, 9, 10, 11. Okay, let's wait until morning anyways. It's 2 o'clock a.m. We won't take any trade. It's not the right time. And this is 7 a.m. in the morning. Let's see daily first. Yeah, this is another QM here. Another QM. And we also have this QM here. Okay, let's see what this guy is doing. Our target is here. Any value that we are going to be taking, we're targeting the high. And then you see something here. Look, this is a break. Let's see daily. Now, a lot of people just go and look for a key level or maybe this on fresh one and say that 4 hour reject daily and give a break. Price is bearish. Price has swept liquidity here. Price has swept liquidity, so we're expecting sales to target this low. No, that's bullshit. You know why I said that? We work mostly or mainly with the higher time frame. What the higher time frame is doing is what we are going to be focusing on. Yes, I know we have a break here. This is a break, right? This is a break. And you can say that this is a retracement. The retracement will happen, but eventually price will do something like this. And start a new structure. I call this structure restructure. It's like building another structure in a structure. This is our main structure here. This place is our strong swing, right? Look at it, break. This is our inducement here. This is our inducement. Price has taken out the inducement, so people will be expecting this. But price will do something like this and go. Why? Because of what the weekly is saying. The weekly is saying that I have balanced price. The external range liquidity that I left below here have been swept. Now let's go to take out all this internal range liquidity, all this internal range, and then eventually take out the external range. That is what weekly is telling you. So you focus on what the higher time frame is saying. The higher time frame don't lie. They won't lie to you. Let me take all this to this place. I don't know if you understand. The higher time frame will not lie to you. So even if I want to be looking for sales because of that break I saw there, I'll know that eventually price might still buy. So this candle is coming from here. Let me see 1 hour. exactly at 6 o'clock, this candle is coming from here. Stop loss below here. Our target will be where this break happen, in case if reversal want to happen. Let me go to 4 hours. Here. Our next target will be where? In QM. Yes, we target it gradually. Our next target will be this QM. Then our next target will be this high. Externally. Now, let's assume that we didn't take this buy at 6 o'clock. We missed this trade. Now we have a break of structure here, both a body break and a wick. And then on a 4-hour time frame, this is an OCL. I can take my trade from the OCL. Yes. Very easy. I can take my trade from this OCL. I'll take my buy from here. I want to put my stop loss here, or put my stop loss here. My stop loss will be below. Because of price coming down to seek for liquidity. My target is small. Yes, 1:2, but I'll target here. So, now even if price comes to this place, let's say price didn't tap me in, price went to this place first before coming here, then this trade is invalid. So just know that. So here, I'm going to be rating 5% here, which is $50. Let me just write $50. $50 is at risk here. Okay. Price is now at our POI. Let's see what happened. Okay, we have our TP. You see what I told you? That if price comes up to this place first, if price touch this place, if this place actually touched here first, I wouldn't have taken this trade. But it's because price didn't touch here first. That's why I still took the trade. So price just came here, did something like this. And this particular place, this is more opportunity for other people to enter, those who didn't enter. This is more opportunity for those who didn't enter to enter. Let me tell you why. Let's go to 4 hour. Look, exactly, price came to the open close level and tested it and started rejecting. Once this rejection starts, now let me cut this. There's no better place to enter from than this place here. You look at this high, and then you don't go to 15, 30 minutes. I won't say 5 minutes because I don't go to 5 minutes. Now at this point here, now look at price came down, and then this is an engulfing candle. Engulf it to say that once you see an engulfing candle, you can either that particular candle, the 50% is here, you enter from the wick, you mark from the wick. You see that this another entry for you. Your stop loss can be down here, and your take profit will be here. You don't joke with it, or you use the QM. But if price didn't reach the QM, then you have lost. So hope we are understanding. So maybe I can adjust my stop loss to this place. So okay, bring it back. So, but that is just it. So for now, we won't trade again. This is 2 o'clock p.m. Let's wait and see what price will do. Let me remove all this extra. So we took just 2 trades here, this one and this one. So this one we target here 1:2. That means we made $50. 1:2. That means we made $100. We were risking $50. 1:2 is times 2. That's plus another $50. Now, how many loss have we taken? It's not magic. It's just knowing where your liquidity is. Now I'm not going to take any trade for now, not because I'm afraid of the market, but because of this. This is sell here. That's just stop it. So stop loss above here, stop loss above here, and then now people will be targeting here. And yes, price might come down. Guys might use this as liquidity, come down to this place, and then start a new buy. I won't take this sell. I will wait. So just as I thought, price came down to this place, but it didn't take us out. This is 7 p.m. 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, 6. So You see all these people who sold from here, they're out of the market already. This 6 o'clock in the morning on Friday. Now remember what I told you about Friday? Friday is a bad guy. Yeah, Friday is a bad guy. I want to look at what happened during the week. Everything that happened is what I want to pay attention to right now. I want to see what truly happened. What happened? And then I'll be able to then, I will then be able to capitalize. If I'm still going to look for more buy opportunity, or I'll stay away from Friday and wait till next week, Monday or probably Tuesday. So, but for now, let's see what Friday did. So this Monday, low, Tuesday, Wednesday, Thursday. Okay, yeah, Wednesday, this Thursday. And what do you think that Friday might do? I believe Friday might just close here or probably buy. No, Friday might close there. Friday don't usually have that momentum except there's news. So let's see 4 hours. Let's see 4 hours. Let me remove this indicator. So I guess this place is going to fail, and we have a key level here. I mean, with these 4 hours, that's a dangerous zone. But here we have this place to buy from, and we have the apex, and then we also have this place here to buy from. Yes, let me see daily. I usually go to the daily time frame once the day opens or before the beginning of the day. We have an OCR that match with multiple V shape, so you can call it your what's it called again? RBS. So they are also resistance that are now support because price has broken above them, so they are now RBS. So yeah, this place is truly a good place. It's truly a good place to look for buys from here. I can look for buys from here, because on 1 hour I have a break of structure on 1 hour. Let me remove this for now, and then this our extreme, and then this is 6 o'clock. What is place at Asia? That's another problem. So my main entry will be down here, probably 14 pips, and my targets will be here first and then this high. So I will also buy from here. Yes, I will also buy from here. Stop loss can be below here or down here. The target will be still this place. Now let me go to 15 minutes and show you that place where I'm buying from. It's not just the key level. At least I saw multiple confirmations there, right? This is a break of structure, another break of structure. Now after a break of structure like this, the first pullback, even if it gives you a break, it's your inducement. So I'm expecting price to sweep this inducement like this and we buy. So beside all this, including here is Asia, all this majorly is Asia as well, so it's a good zone to look for buys from. So let's see what the market will do. It's yeah, we are in already. I can choose to use confirmation here, like 30 minutes engulfing candle for confirmation here also. Okay, since I'm having 2 entry, I will risk 2% here. At 2%, that is 2% is $20. I will risk $20 here, and then risk the same $20 here. So I'm risking $40 for this trade. Okay, I'm risking $40. And also, if I see a confirmation here, I'll add more position. Okay. First $20 lost. Okay, second one not lost. Oh, this guy is crazy. The price came here at 11 and 12:30. Have you asked yourself what price is rejecting from here? It is rejecting from this OCL here, or this here, this resistance. That is where price is rejecting from. I saw it actually. I saw it. So we lost first 20 until when the second 20 closed, then we can add or minus it from our balance. So we lost the second one. So we lost $40 here minus $40. Let me write it. Or should I just let me just minus it? So this is $50. If you minus $40, we have just $10 remaining. So I can just make this one 10. Just $10. So we have okay, it's edited now. This is just $10 remaining. If I lose another one, I can minus from any of, but we're still up in profit. We still have others profit. So we lost these two trades here, here, and here, 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 here. We lost all of them. So price came back to this place. Let's see what is price really doing. What is it really doing? This 3 o'clock, and I believe this low will not survive it. Price will sweep that low. Definitely. That low will not survive it. So let me remove all this. We just look for confirmation if we can take a sell or we take a buy. As easy as that. I have this OCL here, and I think price is coming to this low. Let's just leave the market for today and look at what will happen. Okay, let's just leave the market for today. Okay, 10 p.m. You see that Friday is crazy, right? All this while we're looking for buys, Friday came and just sold. So Friday is trying to balance price, just as I taught you. Look at it. This is the whole complete 1 week. So Monday, Tuesday, Wednesday, Thursday, Friday, balance. Sound easy. Look at it. Sounds easy. Balance. So Tuesday gives and Wednesday gives the week life it deserves. Yeah. So this low have been swept. This low here, it has been swept, and this next week will be the last week that we are going to be back testing. I just hope that you guys learned something. Friday close, tapping into this place. There's possibility that Monday will just open with a buy or open to sweep Friday's low, come down here, and then give us a buy. But yet, let's still see how the week closed. The week swept all this high. Okay, this is the week, right? This is getting confusing. Okay, I think that week, the one we saw, haven't formed yet. It haven't formed yet. So let's wait for Monday morning. Okay, this is 7 o'clock a.m. So let's see. This place is a key level. The key level was tapped, and for we to confirm that we are fully bullish, we want to see a break here. That is when we confirm. Otherwise, let's not take another buy here and we'll fall into a trap. So we want to see a break here to confirm that we are fully bullish, and then we can buy. Let's go to 1 hour and wait for a buy. So you see that on the lower time frame we already have a break. Why we break on a lower time frame like this 1 hour? But if you go to 15-30 minutes, we have a break already here, and making this place a nice place to look for buys from, because these are all Asian low. Stop loss can be here 15 pips, and target can be this high. So but now we have a break above this place. Can we just take a buy from there? This place here, it's risky because it's just the week open, so it's risky. I think we can just wait and see what price we do, even if we miss the trade. A missed trade is, whoa, shit. Price didn't even think about coming back, just bought. But a missed trade is better than a losing trade. You know, you see one buy here. Yeah. No, after this break, exactly London open, just buy. Maybe you want to put your stop loss here or here. That's if you want to go with this swing to this place. But we are going to get more opportunity. Don't worry. 4 hours. I've broken this place. Okay, this is a key level. Behind you. I wanted to look for more buys from here. More buys from here, but it's going to be risky. Yeah, I can look for more buys from here. It's going to be a risky trade, but it's worth taking the risk, you know? Because this is a key level and price is rejecting from there, but at the same time we're expecting this next high to be taken out. All these highs are liquidity, like bunch of liquidity. So we're expecting this high to be taken out, and then this is still 8 in the morning. So, oh, because of my refinement, price didn't tap me in. It's exactly at the place. I guess it's not my luck then. Can you imagine? So if I had refined this to this zone, I would have taken the trade, you know. Look at it. If I had refined this to this zone. But it's okay, it's fine. It's okay. Now the next liquidity zone have been swept. This high is the next liquidity zone. Yeah. And it has been swept. Now the next place to look out for is this key level here. And then this general high. So I'm afraid of that key level. I won't be taking any trade again. For now, let's just look at what price will do. Oh, okay. I think this is an opportunity to enter. A great one to enter. This big retracement is an opportunity. We have this OCI here, so I can enter from the OCI. Since price only swept liquidity, but it didn't tap into any level, my stop loss will be 18 pp. I think it's not bad. This is just 1:2, so we can take 1:2. How much am I risking here? Let's see the timing. 1 p.m. Yeah, it's a good time then. Since New York will open by 2, open, tap me in, and we buy. So I'll be risking 5%. $50. Okay, that's 5%. $50, which is 5%. Okay, we're in, and London. Let's see what London have for us. Whoa, that guy came to our previous entry. Can you imagine? It actually came to our previous entry. So we lost 50 whole dollars here. So let's minus from this one. So minus $50, we just have $10 remaining from this profit. Oh. Yeah, we just have $10 remaining here. We lost 50. This one here, we didn't set any limit because we believe we lost the trade. So this 7 a.m. on Tuesday, let's see if there's any entry for us here. Oh, there is a lot of entry. First, we can choose to wait for this high here to get broken, then we buy, or maybe wait for this place here. So wait for this RBS. It's a good place. I have liquidity and inducements above it. So liquidity swept. Structure broken and broken. So we can choose to enter from here. Stop loss below here. I know this. I don't know if the battery is low again. It's slowing down. So target here. and then the next one is here. In case, we can also choose to wait for this place to be broken, which is already broken here. So we can just enter from here, but it's going to be a risky entry and our stop loss will be so big. If we want to enter from here, stop loss down to this place is 20 pips, and targeting here is just 1:1, not so good, it's bad. Still 1:1, except we want to target somewhere far and far. So I guess maybe we should use candle closure on 30 minutes for this first place, in case if price is planning not to come here. So we'll do it like this. We are in our recovering stage, but we still have enough profit, so we can still wait 50-50, or yeah, $50 50 here. We can wait 50 here, since we have all the confirmation and the trend have been confirmed, so we can wait $50 here. And if we see a confirmation here, we reach another 50. So let's watch and see. So if I see an engulfing candle, yeah, I will enter immediately, reaching my $50. My stop loss will be down here. Yeah, I'll just enter immediately. The stop loss can be here. Okay. I'm 15 people, reaching my second $50 here, and I will be targeting not here anymore. Let's look for another liquidity zone. So, because if I'm targeting here, the RR won't be so good. So maybe here 2RR, that's 2 pips, and or maybe up here, who knows. Price might want to go up to that place this time around. So why this my second entry, another $50 here. So we're not supposed to wait that high though, because we are currently in our recovery stage. But I just felt like the trade is so valid and the direction is clear now. Look at it, the direction is much more clear now. So this first entry $50, the second entry here $50, the second entry here. Let me adjust my stop loss below here. 16 pip, still good. So let's see what happened. Okay, the first one failed. Whoa, the second one failed too. This one didn't give us 1:1. This one, price also just respected it and profit. We lost $100. So that is to tell you that there's no 100% trade. We lost $100, remaining $20 here. So some week is good, right? Why some week is difficult? Crazy, not just difficult. So yes, what are we not looking at? What are we not looking at? Let's clear all this and look at the chart. What are we not paying attention to? Because there must be something that we are not looking out for. What is it? Are we just focusing on buy and forgetting order flow? Because yes, price has its own order flow. If this is a break of structure, we're expecting buys around here. If this is a break of structure, this is an order flow. Price is supposed to retrace around this zone, at least the 0.5%. But price didn't retrace down to this zone. Could it be that this is what we didn't see? Because we are just looking for buys from here. Yes, price is just giving us that buy vibe. But what about order flow? You know that price is supposed to give us a retracement to at least 0.5% for we to confirm this buy move. But price didn't do that. You see, that is where we made mistake. So we're just looking for buys. We didn't go to the higher time frame to see what is really happening. Another lesson learned. So here, we still have this zone, and then this zone. These are the fresh places that we have here. Let's see 4 hours. So I guess we should wait for price to come down to this place, then we buy. It will be much more better. This was a fake out. Look at this breakout. It was a fake out, and we led ourselves into the trap. So Let's allow price to come down first, then we buy. Yes, we should allow price to come down. Okay, 12 o'clock a.m. price didn't come, rather price just gave us a break. You see, this market you see here, it's like open and close. Look, now we're expecting price to mitigate the order flow here, at least come to 50% here, but price didn't. Rather, price will retrace and start going. So that doesn't mean that we can still take a buy. For now, let's wait and see what is price doing. Look at this buy here. We didn't look out for all. The retracement still didn't come back to it. Okay, finally came back. I think I should still delete my this. The lines here are much. Okay, price came back. 9 o'clock. It was a good timing. This buy here. So how did I see this buy? I saw it from when price broke this high. This is a breaker block, and next this place is also a breaker block. See it? So that was where this buy came from. Still on Wednesday, though I didn't take it way down. Okay, price stop us out at BE. Let's see. Still hit TP, and down to Friday, price hit our TP. Remember that on our weekly time frame, the aim was to take out this high have been taken out, and this one have been taken out. Now the next thing is look for a key level where price will touch and start giving us a retracement. So this is another Monday. The week is over. I hope you guys learned something. I hope that you guys learned something. Oh, let's calculate our profits. This week we had like 4 loss or 3 loss. 3 loss, I guess. So this is our equity: $1,000, 350, 20, 20, 10. That's 400, 410. It means that our overall balance is 1,410. We are still on profit, guys. So yeah, I just decided to do this teaching because I felt like not just you guys who need it, I also need it. Yes, I need it. No one is above learning. No one is above learning in this forex market. Okay, we are all here to learn, and you guys should do well by following or subscribing to my Telegram channel. This is my Telegram channel here. I share all my trades here. All my trades. This was all last week trades. You see that some were missed. So I share all my trades here on Telegram, and also should do well to follow me on all my social media handles, mostly my Instagram. And I have Instagram, I have TikTok, I have X, all of them with the same name, EverrestFX. This is the name here. EverrestFX. So you guys should do well to follow me. Also like and subscribe. I love you guys, and I'll be sharing more video. In case you have anything you want me to teach you guys about, just let me know in the comment section. I love you guys. Bye.